Hey, good evening, everybody. How are you? Thanks for being here. I appreciate it. Now that it sounds like everybody has their cocktail out except for me, probably not a good idea for me to be drinking. I hope everybody's doing well today, being safe, feeling good, things like that. Let's see, recorder is up and running, and for the purposes of the video, hi, this is Rick with Hit and Run Candlesticks, and today is Tuesday, January 26, 2021. Again, thank you everybody for being here. So, well, let's just get things kind of kicked off, I guess. Don't get too formal here. For one, I welcome questions. So anybody new here, please feel free to ask questions. And of course, anybody that's not new here, you're also more than welcome to ask questions. One question I was asked that I would like to answer just right after the market opened, and or right after the market closed today, and I did not get a chance to answer this. I didn't see it till I sat back down. I saw the question. But somebody asked me how I arrived at this 383.65. What makes this level right in here important to me? And I want to share something. It's not, you see so many people. Where is support? Here is support. There is support. Here is support. Things like that. And I'm not sure that there's actually this is, maybe right here, maybe this is the absolute support. I don't know that is a true statement. Where is support? Support is where sellers, in this case, we're looking at bullishness. Support is where sellers give up and buyers take control. That's where support is. And just because there's some magical line here, it doesn't make that the support. For instance, I have this line marked right here, and I'll share in just a moment why I did that. What if price was to just dip down just slightly tomorrow and then come right back up? Does that mean that was way off base? Just like this line here, maybe that's support. So if price came down and dipped just below it and then came right back up, was that wrong? Again, support is where buyers take control. That's where support is. We put our best foot forward in where we put that support. We base it on. I like to think we base it on what we are looking at in the market. So one of the things I've got marked down here, and tonight I want to talk, the whole talk tonight I think will be around, or at least the first half of tonight, will be around trading the wall of worry, because I'm getting a lot of concerns, and myself included, am concerned, well, geez, just how much more can we just keep going up? And that's what I want to talk about, the wall of worry here a little bit. And so one of the things I've got written down here in the beginning is to define your strategy. Once you define your strategy, and what I mean by define your strategy is what kind of chart patterns you're looking at. Rather than being all over the charts, buying oversold charts, buying overbought charts, buying charts that are breaking out, buying charts that are way down here, in an oversold, beat down area, buying charts in the middle, things like that. Is find a good strategy that you can trade that makes sense to you. And the strategy is not always, or you should also include, I think anyway, you should also include not just the chart you're looking at, but the the indices, excuse me. Honest, I have not been drinking tonight. Choose your indice of choice. Now, I think anybody that's been here for a while, you know that my indice of choice is going to be the S&P 500, and I use the SPY to uh, look at that. And I also use FNGU, and we're going to go look at that in just a minute too. But so that's what I do. Instead of just looking at chart, I want to make sure that the indice also is acceptable. And one of the strategies that I use is simply to define that trend. And defining that trend is very important. And what I did today with this earlier, I think it was earlier this morning, it might have been later yesterday, I think it was early this morning. This line here is I went to a 3-bar chart. I have found that I really like the 3-bar chart a lot. And it's really kind of cool because I've had confirmation from many people in the trading room that they like this chart as well. And that's, man, I think that's fantastic, and it adds confirmation to something I'm looking at. So I think it's wonderful when other traders, other successful traders, follow the same, in this case, the same time frame maybe that I'm looking at. And so you can see right here, I think, if you if you know anything about here, first of all, let me get rid of this line right here. It's in the way. There you go. If you know anything about support and resistance, you know that support starts when we fail at any area we want to. At any place on a chart where you see a failure, that starts resistance. Well, here you can see if we put our resistance line here, we broke out, so all of a sudden now we have support. We closed above that line again, we have support, and again, and then we gap down below. So now that gives us, that changes the attitude of the chart where we are below support. Now that's making resistance. Well, you can see that resistance. And see the touches we have in here like this? See where we opened up, and let's just do it that way. See where we opened up and came down to? We opened up down here, and look where we stopped at. Can you see how that line just becomes an important line? Now, what if price, well, I probably should finish this. So here, we broke out and we stayed. So we stayed above that resistance line, and that becomes support. Once again, support. Doesn't matter what the candle looks like. The candles are very short-term in nature. Sure, this candle suggests we're going to see a lower low maybe. We did. But we stayed above the support line. Still support. Even today, not the best looking of candles, not the best looking 3 candles I've ever seen, but we are still above support. Now, that doesn't mean that we're going to hold up, and it doesn't necessarily mean that this is going to be some super bullish chart tomorrow or within the next 3 days. It doesn't really mean that at all. All this is just shows us where support is. If you're bullish, what I'm looking for is to be bullish as long as we stay above this magical line. And if we fall below this magical line, then that changes my attitude. Up here you have let's see if I can draw this here. Up here you have a bouquet of balloons. Anything above that line, you have a little bouquet of balloons. Everything is great, rosy. They're floating in the air. You're skipping. You're having a great time above that line. We go below that line, and what happens is these balloons start to pop, and your attitude starts to change, as price gets below that support line. So those balloons start popping like that, and that's what's going to change our overall attitude in what we're doing. So when I'm looking at a chart, and I see the chart working, and then maybe it's still working, but I see my indice of choice, which is the S&P here. And I, again, I look at it through the eyes of the SPY. If this starts failing, then I start questioning my positions, because the overall market, in my mind, is starting to move down. So this is where we start getting a little concerned. We start getting a little worried out there. So anyway, I hope I explained that well. And the person is here, so I hope that made some sense to you right there. And let's see. I think somebody asked about the 3-bar chart, and I think you guys answered it. Thank you. If anyone still needs anything about the 3-bar chart, please let me know, and we'll certainly talk about that. Now, let's go look at Microsoft. Microsoft is up today. Fantastic. I think we all might say, hey, Microsoft being up like this is going to help the market. That certainly is the way I'm going to go into tomorrow, unless Microsoft takes a total nosedive to the downside here. So I'll be watching. Let's go back to the daily. There you go. I'll be watching how Microsoft opens up, because that might dictate how the market starts to work out tomorrow. The other chart that I like to follow is FNGU. Now, I've said this for quite some time, and I owe this chart to one of our members here. I don't know if they're here tonight, Sean, but a lot of you guys might know Sean. Sean showed me this chart. It's got to be over a year ago now. And at first, I mean, I've never even heard. Up until about a year ago, I never even followed the FANG index here. And I started following this, and I started watching this. And I've come to the conclusion that until it changes, this chart here has just as much strength to me as, say, the S&P does. Bottom line, the market is going to go where the money is. That's just a fact of the market. That's the fact of a chart. So, I mean, take Apple just by themselves. They're their own market, for goodness sakes. So if this is moving up, then I'm going to have a fairly bullish outlook on the market, really, no matter what happens to the overall market. And say this moves up, and sometimes I've seen where this chart has moved up and maybe the diamonds have dipped down a little bit. I'm still going to remain bullish, because this is the group of charts that's running the whole stock market right now. So anyway, I want to point this out, because this leads to this whole wall of worry thing, okay? Hey, and I want to make sure sometimes I get to talking here and I forget to read these questions here. Thanks, Malcolm. Let's see, Tony, you're new here. Welcome, Tony. Glad to have you here. I can get the scanner, and which is the best trading firm to open an account? You know, Tony, I can't tell you which one the best is. Maybe if there's some members here that just want to type in what they use, I'm assuming if somebody types in what they use, that means they must like it. I don't know what the best one is. I honestly don't know. I think everyone has maybe a slightly different opinion, okay? See, John, do you look at pre-market? Do you look at pre-market an indication of the Microsoft might open? Oh, sure. You know, when I'm at my desk here, probably sometimes 2.5 hours before the market opens up, and yeah, I'm watching pre-market. I'm watching what's going on. You know, I watch CNBC in the morning. That's my morning thing, cup of coffee, CNBC, and when it comes time to come sit at my desk, about 2.5 hours before the market opens up, then I'm watching things. So I'll be watching what Microsoft does in the morning. Yeah, absolutely. Thank you, Malcolm. There's a trial to the live trading alerts. Appreciate that. Let's see. Okay, thanks everyone. I use Rick. Rusty. That's I'm sorry, that was kind of funny. Thanks, Rusty. Thank you, everyone. Hawk, watch for great news coming up in AMYZF in the next 2 weeks. Thanks, Hawk. Appreciate it. Let's see here. I'm just trying to get through these questions. All right, there we go. So let's talk about now. Let's talk about trading this wall of worry. This is something that I've had several conversations with quite a few people, and I get the drift from in the room sometimes and through private messages. You know, how far can this market continue to go? How far can it go before it has some correction? I hear a lot of things. Let's see. Let's go over to this chart. You know, I hear a lot of things. Man, look how far we are from the 200 period moving average. And here's the 200 right here. Right there. Look how far we are. And you know, you can't deny that it's far. I mean, you can't. The chart doesn't lie. There it is, right there. And I hear that an awful lot. And this is where I think that it's important to declare your trading style. Okay, this is important. And what I mean by that is some people are short-term swing traders. Some people are long-term swing traders. Some people are just investors, things like that. And once you declare what you are, then I think it's easy to look at the charts. But if you don't declare what you are, if you don't commit to what you are, if you don't admit what you are, then it's really hard to make any kind of decision in the charts. I think it's really, really hard. Let's see, what was it? NKLA, Nikola, yeah. So let's take Nikola here. I had somebody question, and I don't mean this in a bad way, okay? I welcome the question. I had somebody question today, why did I close my Nikola for 50% profit? And why? Because I wanted to. I know that sounds like a flippant answer, but I'll take my 50%. Seriously. And the person, and it was PMing me throughout the day because we closed it up. I think it was before lunch. Yeah, before lunch. And they had an argument that it was moving up higher. And I did not disagree with their argument. I do not disagree with that at all. But that's not the way I'm going to trade. Hawk there might not trade the way Mike trades, or Mike might not trade the way John or Lee trades. Everybody has to trade, well, everybody does trade a little bit different, but I think it's important that everyone declares what you truly do. Admit it. Not in here. We don't want to clutter the chat up too much. But wherever you hang out during the day, or if you have a friend that you trade with, write down on a piece of paper what your trading intentions are. Declare the way you want to trade. I make it very clear how I trade. When I post my YouTube videos, just like the one that I posted tonight out there for the trade ideas, here, let's just look at one of them really quick. Let's look at let's take Blink here. Let's take Blink. Blink is, or no, let's take AAOI. Why is this not working? Oh, that's why. There we go. Let's take AAOI. Okay. So I don't know if I actually went through this motion on this particular stock on the YouTube video, but I know one of the I think it's 8 trade ideas that I put out there tonight. At least 1 or 2 of the 8 trade ideas, I did this. So I have a stop in here. I have a buy box in here. And these are all approximate, by the way. Wherever I end up buying this, I'm going to adjust that stop based on what I paid for it and what day it is. I mean, the whole makeup of the chart might change in 3 days or a week or something like that. There's absolutely no guarantee I'm going to trade this tomorrow at all. So once I get into this stock, if somebody says this stock is going back up to 1750 or so, okay, I believe you. I'm not going to argue that fact. It absolutely could. But as it starts moving up, I've done this so much that I'm pretty sure everybody in the room knows this, that as it moves up, I'm going to take profits into strength. And I'm out of it by now. I mean, I'm well out of this trade when we get up into this here area. But the important thing I'm trying to say here is declare what you're doing, because that will lead to how you trade this wall of worry, this trend of worry. If you're concerned, maybe you're not concerned about it. Maybe you're not. But if you are, this is you have to declare these things, and that will help you make sense of this. Let me give you an example here now. So I'm, for the most part, a short-term trader. If I buy something today and it moves up a good percentage and I make some money, yeah, I'm going to sell that today. Does that make me a day trader? No. I probably make if I make 500 swing trades a year, I'll bet you I only make maybe 20 day trades a year. I just don't do any day trading. Now, as far as a swing trade goes, I get asked all the time, what's my hold time? My hold time has nothing to do with anything at all. What I'm after is simply to make money. So as price moves up, I'm going to look to make that money. And hold time's got nothing to do with it. If I can make my money in 3 days, good for me. If it takes me 3 weeks, okay, that's fine too. So what does all that have to do with everything? And it's mainly you're setting up a plan here. You're setting up this plan, and you're trading this wall of worry with no worry now, as long as you have that plan in place. With that said, here's some things I've done this starting last week a little bit, and then going into this week a little bit. Reduce the risk if you're concerned about the market. If maybe you've got political concerns, and that's about all we're going to talk about on that subject. But if you do have those political concerns, then okay, then adjust your trading to that. And before we even talk about anything else, I want to remind everybody that cash is a position. Cash is an absolute position. And the stock market is like the weather. If you don't like what the stock market is doing right now, just wait a few days. It's either going to get better or it's going to get worse. Okay? It's either going to be sunshiny or the rain is going to continue to rain. So just be patient. You don't have to trade every single day. The way I look at it is I have about 243 days a year to trade. And I certainly don't have to make my bones the first week. I don't have to make my bones the first day. I've got $243 to make my bones. Okay? And I know exactly how many bones I want to make. I know exactly. I know to the penny how much I want to make. And that's part of my trading plan. And if I know how much I want to make, then I know how to divide it into how many days and what I need to do. Okay? Hey, Dick, you might want to reboot the room for yourself. Top right, there's two arrows that kind of chase each other. All right? So hey, Doug, how are you? Glad to have you here. Sorry you had to shovel so much today. I saw your picture you sent me. One thing you might want to do is reduce the size or reduce the amount of positions. You know, if you're typically out there running with 10 positions, what would be wrong with cutting that in half to 5? If you typically run 5 positions, what would be wrong with making that only 3 positions for a short period of time until the wall of worry made you stop worrying? Okay? What would be wrong with that? And I would say nothing. Another thing you might want to do is I don't know how much money anybody puts into the market, so I'm just going to pick a number here. Let's say when you buy a chart, when you buy a position, you spend $1,000, okay? What would be wrong with only spending $500 on a position? So you can't buy as many shares. Isn't that the goal, to reduce some risk? So that just makes a little sense to consider doing some of these little things if you are concerned with this wall of worry here. Also, to establishing a couple little rules, like a trend rule, for instance. And what I mean by a trend is I can tell you exactly what my trend rule is, okay? I'm going to put the T-line back up here. I had it off. I did the video a little different today. I'm actually going to remove that 50 period moving average right there. There's my trend rule. As simple as that. If I'm in a position and it starts breaking my trend rule, I'm a very unhappy camper. I mean, I squirm in my chair. I sweat. I'm grumpy about that. So create some trend rule that you have. And if that position you're in, or if the market is starting to break your trend rule, then don't be in the market. Or maybe change directions on your trading. And it's just so simple to declare what you want to do. Every day, I mean, if you want to, I don't know where everybody hangs out. I don't know if people are in the right way options room here, or if you're in the hit and run candlesticks room here, or somewhere else, or maybe you don't hang out anywhere. Excuse me. But every morning when you get up, if you need to do this for a while, just write on a piece of paper or share wherever you are. Say, this is my trend following rule. Mine is, as long as price is above the T-line and T-line's above the Trendicator, I'm pretty much a happy camper. What if price did something like this? What if price, let's make this a little more drastic. What if it did that? I'm concerned, but it doesn't change the trend. As long as price is above the T-line and T-line's above the 17, I'm still going to be bullish. But I am going to be nervous, yes. Yes. All this candle would suggest is we're going to see a lower low. It doesn't suggest we're going to cave in. It doesn't suggest we're going to fall apart. It doesn't suggest that the world's going to come to an end. It doesn't suggest you should go buy booze, bullets, and guns. It doesn't suggest that. It just simply suggests, you know what, we just might see a lower low. We need to see follow through on all charts we look at. That's one of the rules I like to follow. So have a trend rule. Another good thing is have a stop out rule or a loss rule. For instance, if you buy some charts by position, say over the next few days, and then over the next few days after that, these positions start losing on you. You start losing these trades, and they're breaking down below your trend rule. Not just a unhappy day, but breaking down below your trend rule. So you've got one that does that. Here, let's do this. You've got one that does that. I'm not going to get too upset over that. But all of a sudden, if you have two that does that, or three that does that, maybe it's time to say, okay, hold on for a second there, Rick. Hang on. I bought maybe 6 positions over the last 4 days, and I've got 3 positions that have gone the wrong way to the point they're breaking some rules here. Maybe the thing to do is not buy another position. Maybe the thing to do is stop for a moment and say, why are these trades falling apart? You know, it could be that the market is seeing some follow through to the downside. But yet you're still holding these positions and you're wondering why you're losing on those. And a lot of people, what happens is they ignore this and they run out there and buy more positions just because they have money, thinking that all is going to be okay. And you know what? One of those positions you buy just might be a rocket ship. Just might be. But these three positions right here, whoops, let's go red here. As they move down further, I don't care how big that rocket ship is, those three positions are going to kill it. And then what happens is one day you wake up and you realize, what have I done here to allow these positions to move down so much? So you go back, you do some analyzing, and you think to yourself, you know what? I had three losing positions. Maybe I should have stopped for a second and reevaluate the entire market, reevaluate my plan, reevaluate my strategy. And by then it's too late. You're out all this money. And if you've been making money, let's see here, arrow. If you've been making money for the past 3, 4, 5, 6 weeks, something like that, it just takes 1, 2, 3 positions right here. It just takes a few positions just to ruin what you have made. And you know what the worst part of that is? Is this right here is time. All this is time. That's time, 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 time. And if you give all that back, if you give all that right there back, somebody might say, well, you know, I'm okay with that because I made that much money right there. I netted that much money. The thing of it is you can't get this back. It's gone. Time has gone. You cannot get time back. So you've worked all this time to give it back on just a bad call for one day maybe, not getting out of the market, not stepping aside and saying, you know what, this market has come to a place that I cannot handle. I can't handle the choppiness. I can't handle the whipsawing. I can't handle the amount it's moving down. You know, I can't handle the fact that, and don't get me wrong here, I'm not saying the market's moving down, okay? I'm not saying that. I am saying the market is choppy as all get out. That I am saying. But if the market starts moving down and you ignore this, and you ignore it because, man, there's almost $2 trillion going to be pumped into this market. I'm going to ignore it because there's Microsoft maybe made great earnings. I'm going to ignore it because that guy that I really like on the TV show says this market is bound to go up. And you know what? I'm not going to dispute that. I'm not going to dispute that at all. I'm not going to dispute the fact that this market can go up higher. Where to? I don't know. Pick a number. I have no clue. No one knows where it can go to. Just pick a number up there. I'm not going to dispute that. But before it gets there, it can move down. It can move down. And if your trading style is it gets punished for this, well then you need to pay attention to that. You can't let your I hear this all the time. My gut feeling. Your gut feeling. What a load of garbage. No gut ever traded the market. No gut ever traded the market. Follow your rules. Follow the trend. Follow your strategy. Things like that. Not your gut feeling. Not, well, I think the market is going to go up because, and if it's, you know, some political view maybe, or like I say, almost $2 trillion being pumped into the market, things like that. Look, I'm I'm not arguing that it can't go up, but it can pull back before it goes up. You don't believe me? There it is, right there. Who would have ever thought? I never would have. I mean, I'm not bashful to say I was totally no way this market's going to come back. With all the news, with all the COVID thing here, with all this, with all the destruction that you can possibly think of that it would cause, I never would have dreamed in 100 years that we would be up here right now. This move right here wiped accounts out. This move right here, because people did not pay attention to their charts, totally crumbled charts. Just because of hard-headedness, hard-headedness, that's it. Sometimes we've got to step back and say, you know what, today's not my day. This week is not my week. Maybe this month is not that month. Boy, I hope not. I'd be climbing the walls if it was a month. But there are these times when you just have to just stick to those rules. Of course, you have to have the rules. And that's why I think everybody should declare what you're doing. Okay? So, a couple things I like to ask myself is, what is price doing? What is it doing? And the best thing to do there is and I have to give this to Doug. I mean, I've certainly looked in the past at charts with just candlesticks on there. But Doug there at Right Way Options, he's king of price action. There's just no question in my mind about that. And he calls this the naked chart. We've picked that term up. What is price doing? Well, answer your question. What is it doing? It's that simple. And then if you like what price is doing, well, describe what you like about it. Describe what you like about it. So once you describe what you like about it, where would you not like price? Well, what if price fell below that blue line right there? Malcolm. I haven't made a loaf of bread here in a few days. Now you're going to make me do that. So anyway, the key thing I think is the way to trade the wall of worry is just stick with a solid set of rules, something very, very simple. And it's well, for me, that's what I use right there. That's it. When the T line, when price gets below the T line, I get very nervous. When the T line gets below the Trendicator and the Trendicator turns red, I'm as nervous as they come. I'm not in a very good mood. When price looks like this, when the trend is moving up, price is above the T line's above the 17, or Trendicator here, I'm a happy camper. When this thing is still trending, and it's as long as it's, I just played with colors. I think I saw one of Malcolm's charts today, and his was kind of a light blue. And then I thought, you know what? I think I'll change mine up. So today it's blue here. When I see that blue and not red, I'm a happy camper. Everything's working. But there might be those days. That causes me a little grief right here. A little grief. Okay. So anyway, I apologize. I just kind of started talking, and I really didn't pay attention to the chat. So I do apologize. If there is a question up here that I have not answered, don't make me go back up and look for it. That'll do nothing but waste us a whole lot of time. If you have a question, please repost it in here, and I will focus on the chat here, all right? You guys, you're making me hungry, and I've already had dinner, and it's too late to eat. Yeah, man. All righty, let's see. Emma feels like I know. If you were here earlier, Emma, they had cocktails out and they were drinking there. Mel, what do you do when price goes below the Trendicator? Do you pause trading and watch price? I start backing out of a lot of trades. I start closing up shop. Yes, I do. If I have a winning trade, I shut that thing down. I take my money and walk away. Absolutely. If I have a losing trade, I look at that losing trade really hard, and I have to make that hard decision. But I am quicker at shutting a profitable trade down. Yes, I do. My trading is all about what is price doing in relationship to the T-line and what the T-line is doing to the Trendicator. I am not a long-term trader. I'm a profit trader, okay? I'm a profit trader. Years ago when hit-and-run candlesticks first became hit-and-run candlesticks, one of the taglines was profit trading. That was it. The actual original name of hit-and-run candlesticks when it first opened its doors was called trading for profit. Now we have since, it was called trading for profit / hit-and-run candlesticks. Now we have since dropped the trading for profit, but it doesn't mean that I have stopped trading for profit. That's what I do. When I buy a position, I'm in that position. Take CGC. I'm in CGC here, so I'm looking to make some money on CGC. Now I think there would be a lot of people argue, and I think their argument would be pretty darn good. With the political landscape that we have, CGC or pot stocks in general are likely to go higher. I'm not going to dispute that. I actually think that's the truth. But it's not going to change the fact that I'm a profit trader. So as this moves up, I'm going to start taking profits. And besides, I think CGC, I think taking profits at 40.20, I think is kind of cute. So I'm going to do that. But it's just the design. It's just the design of a trading strategy is what it is. That's all. Thanks, Mel. Let's see. I lost my place here. You know, Jim, I've had other people say that. Yeah. It's too late in the game to change that name, though. There we go. I found Mel. There we are. Now I can go down. M. Oh, no. Vitali, is that Rick? I follow your videos and love your style. Thank you very much. Profit trading is what it's all about. Yes, it is. But, you know, it doesn't mean that you have to be a fast trader. You know, it doesn't mean that you have to take all your profits right here or all right here or all right here. I think maybe a good strategy might be where, you know, let's say I'm just going to talk options here. So say you buy 10 contracts maybe on CGC, for example. So as it moves up, you might take a third of that off the table. As it moves up higher, maybe you take another third off the table. And then maybe once you're comfortable, you allow that last third or last half, whatever trips your trigger. The whole idea is make sure you put your money in your pocket. You do this, then the odds are you're actually playing with the house's money as it goes higher. So the stock moves higher, and you know you just raise your stop on it. And of course, the stock's going to move down. We all know that. We all know that it's going to consolidate a little bit. But if it doesn't break down through that support area, let it pop up, raise that stop, let it pull back as long as it doesn't come back through that support. And now you've made your money here. You put that cash in your pocket, and now you're letting this run. And man, I'll tell you, you'd be amazed what a few contracts or shares can do for you up into here. So, but see, that's just establishing a strategy is all it is. Write it down, declare it, share it with your friends. When you share it with your friends, it makes it real, is what it does. It makes it real. You know, I ask everybody in the trading room, you know, when you buy something, share it with us when you buy it, because that makes it real. You know, when you share it when you buy it, and then later that week, when you share that you just sold it for 20, 30, 40%, man, I'll tell you what, that's kudos to you. So just declare what you're doing. That's the important thing. Declare it. So thank you, by the way. Thank you. Kevin, when are we doing a HRC right way options barbecue? As soon as we can. I got to tell you that. I've already told my wife that, when this gets cleared up, when things get sort of, cleared up, I guess. Excuse me. I'm going to do some traveling around. There's some people I want to see and hang out with. I want to go jeeping with Kevin there. So, yeah, we will. We will. Let's see here. Okay, let's see. Can you please talk about proper entry in the box? How do you know when to, let's see, proper entry in the box? How do you know when to enter in the box at the top, or do you just catch it anywhere? I catch it anywhere, but let me explain what I'm doing, okay? Let me explain with you what I'm doing here. Let's take one of today's trade ideas. This is again, if you go to our YouTube channel, you'll see this video on the YouTube, and you'll I explain it, everything there, kind of what I'm doing here. So your question is, so we've got the buy box, and by the way, you can put the buy box wherever your little heart desires. All I do is wrap the candle. That's it. There's no magic. Whatever this top is, $11.37. That's not a secret number up there. It's not magic. It just simply, I like an inside day. I like to buy a chart that does this, okay? I like to see bullishness, and then I like to see consolidation. I like to see the bulls come back into it, and that's where I like to buy. Or if maybe on this day here, maybe it shows a little bit of a rest, and then throughout the day, maybe it forms a little hammer, little tail in there. Doesn't have to be a hammer. And then price starts breaking out. That's what I want to see, and that's where I may buy. So bottom line, I like to see some bullishness and a rest. That's basically it. Now, as far as where to enter, look, I will go round and around with people on this. You better bring a sack lunch with you. In fact, you better bring an entire meal for a long, long time, because I will argue this one to the day is long. Everybody that searches for some trick price on an entry, I don't get it. I truly, truly do not get it. Entry never made anybody any money. It's what the chart does after you buy it, all right? Now, don't get me wrong here. We don't want to buy it up here. We don't want to do that. We want to buy in this area. And then what we're looking for is we're looking to make money as it goes up. I see so many people shopping for some trick entry, and I would argue that most people that shop for some trick entry, they're the ones that make less money as it goes up, because they're the ones that they're trying to pick pennies up, stepping over dollars. So what will happen is if you're some trick entry in here, some 5-minute super duper, it's doing something fancy or snazzy, you're waiting for it to pull back. And I love this one. Somebody says, I'm going to buy this stock at $10.42. I love that one. I mean, that's where honestly, I have to turn the mic off and walk away, because I know I should not make fun of that. You're going to buy it at $10.42, huh? Where in the world did that 2 come from? And I would argue, and I have proved this with many, many, many traders, the person that does that, you're selling this thing right away, because you're stepping over dollars to pick up pennies. Rather than that, I look for a chart that has room to move. That's where the key is to me. That's where the money is. The money is not this itty-bitty little area down here. The money is what price can do. That's where the money is. So I look at this chart here. I see there's a little bit of resistance right in there. That line right there also coincides with that high over there. And then I see a little bit just right in here. So I'm thinking this thing might slide right up between 1270 or so and 1330. But again, somebody that shops for $10.42, they're not going to make it up there because they're all about the pennies. So what happens is they get out and they cut themselves short. Okay? So to your question, do you just catch it anywhere? That's exactly what I do. But I wait for the bulls. I don't buy, I don't start a position. Okay, this is important. I don't start a position when the chart looks like this. So say tomorrow's like that. I'm not going to buy that. On the other hand, if the chart starts doing this the next day, that I'm likely to buy. Now, at the end of the day, if this actually turns red, I'm okay with that. I'm all right with that. But I'm not going to buy into that. I'm not going to lean into selling, and that's all that is, leaning into selling. So I'm always buying on a bullish candle, which means 9 times out of 10, I get worse price than most people get. I pay a higher price than most people get. But it seems to work, right? I mean, it seems to work. Now, let me talk about that red candle no buying for a second. Here's where I will go against that. And I'm going to bring up another chart here. XLU, okay? Yesterday, in fact, well, Doug from Right Way Options, he announced in Right Way Options and sent it out on the Right Way Options members alert app. So Right Way Option members, if you don't have that app and you're a member, please grab Doug tomorrow and make sure you get that app downloaded. But he sent that out, and I have my app, and it popped on my app. Doug was buying it down here somewhere. And I thought, you know what? And I don't know exactly where he bought it, okay? But I thought, I think I'll just wait for it to pull back a little bit because that's a great looking chart. That's absolutely a beautiful chart. But the doggone thing never pulled back. Darn it. So what did I do? At the end of the day yesterday, I bought it high. Now, what I did, because there's a high probability that it was going to pull back, and rather than buy a full position, I bought, whoops, the wrong one. Let's try that again. I bought half a position. I bought half a position. So just in case that it took off, then I was going to be a winner with just half a position, just in case. Who knows? So that's not what happened. It pulled back. Here's where I will buy on a negative candle, a bearish candle. And that is a case like this. So I ended up buying a little bit today somewhere down here and then a little bit more right in here, down near the low. So I added to it twice today on a negative candle. But I'll only do that if I'm already in the position. I won't do it on the first start, the first position. Thank you. Sorry, that was an awful long explanation. Mickey, when buying a call option, you're looking for a good amount of open interest and a delta of 70-ish? Yes. With a put, what kind of delta are you looking for? Still 70. Still 70-ish. Yeah. Still 70-ish. Kevin, hey, Phil's coming over. Hey, Phil, what is it, like 1 in the morning, 1:30 something, wherever you are there? Thank you for being here. Phil told us that he was going to take a nap and then get up and come to the room tonight. So thanks, Phil. Let's see here. Where are I clear? Let's see. Always welcome there. Belgium, okay. Let's see, Val, I just, you guys talking about food and grills, you're making me hungry. Let's see, Scotty, I'm looking to take a long position on ARC. Okay, let's get rid of that. It's holding above support. Well, let's see. Man, I would have to agree with you, yes. There is resistance. Why is that resistance? Who cares why? That's where it started to fail. So that makes that resistance. We come back up. We broke out. We're holding. Nice looking chart so far. Let's see here. Holding above support and getting close to the trend on the one-day chart. I think it'd be a good setup for a pop out of the box. I agree with you. Yeah. Strategy. Can you share your analysis? Sure. First of all, I'm not sold that's a pop out of the box, but I get what you're looking at. You can call this whatever you want. I think that's a very, very nice chart. Okay. This is more of a flag to me, but we're just splitting tomatoes. We're just splitting hairs, okay? Either way, I think it's a very nice chart. Okay, so with that said, let's take a look at this. Look at that beautiful rounded bottom. And I do mean beautiful. That's nice. And inside this rounded bottom, take a look at the lows, highs, and higher lows. First, take a look at that double bottom right there. And then see how we rise up. We come back and we put a higher low in. We rise up for a higher high, we put a higher low in. We rise up for a higher high and a higher low. That's a nice looking chart. What's wrong with it? Let's take a look at the weekly. Let's find something wrong with it. I still don't see anything wrong with it. Anyone think it can go up here 19 bucks, move $2? Let's see here. There we go. What are we talking about? 8, 9, 10%? That's a nice chart. The only negative, if there's a negative here, the only negative that I actually see, it has earnings on the 10th, just around the corner. Outside of that, Scotty, I think that's a beautiful chart. Beautiful. You guys found grease fryer. Where you guys are killing me. You're making me hungry. Uh-oh. Who wrote Brussels? Kevin, Brussels sprouts. No. That's wrong. Those things aren't even allowed in my house. They stink. What percentage loss do you allow for when setting a stop? It's got nothing to do with percentage, Mike. It really does not. Now, I got to tell you, I certainly don't want anything. It really does not have anything to do with a percentage. With that said, we start getting into the here we go, 6, 7%, 8%, things like that. I'm not real happy with that. I'm not real happy with that at all. And but the stops aren't set based on percentage. They're based on the chart. They're based on support resistance. They're based on what the candlesticks are doing here. I use the 3-bar chart an awful lot for that sort of thing. It's just a better way for me to take a look at what the price action is doing. So I'll come in there and I'll look for a stop based on 3-bar chart a lot. And then from there, what I'll end up doing is I'll take it back to the daily chart, and then I'll go from there. Truth be told, and it's not meant this way. It's not meant this way at all. It was never the intention. But if you watch my videos, let me give you a little clue here. You'll see my stop is always around the T line, but it truly has nothing to do with the T line. It really does not. It just so happens that that's always where it is, because of the type of charts that I'm looking for. You take a chart that moves up like this and then comes back. All the scans I use, almost all of them have something to do with the T line or the Trendicator, that sort of thing. you know, I have some that rallies up back to the T line within a certain percent, or charts that are below the T line in the Trendicator and cross back up, and then, you know, back down for that entry. It's just it's the design of the type of charts I look for. But if you'll take a look, almost all of them are around the T-line area. Sometimes they're a little higher, sometimes they're right on, and sometimes they're just below. But it's always around that area. And that is just, it's a function of creating that plan and then trading that plan. You know, I used to be one of these guys when I heard people talk about a trading plan, I would stop the webinar. I would just, I don't want to listen to it because I get tired of all this plan business. And that's because when I never really learned what it was to make a trading plan. And every time I did, it took me 19 pages to write it out. And I got frustrated with it because I was trying to do too much. Trading plan is really simple. Take this chart, for instance. My trading plan all starts with a trend. Everything has to be trending. I use the Trendicator to tell me that more times than not. Now, in my scans, I do have the 34 trending up. That has to be trending up. But this is my key right there. I want the Trendicator trending, which this is just the 17 exponential moving average. Nothing fancy. That's all that is. I want that trending up. I want the T-line to be above that the Trendicator there. And then I'm looking for a rally. And then I'm looking for consolidation. That's it. That's my entry. Now, one of my favorite chart, I'll call it a strategy, is the rounded bottom breakout. It doesn't change my entry, though. The entry is exactly the same. I want to see bullishness, and I want to see a rest back towards the T-line or close to it. So this type of chart, this is simply, we call this a 3/8 trap. This is a beautiful, beautiful chart, by the way. This would be a nice 3/8 trap here. And anyway, I hope that made some sense. I don't want to muck up everything I've just said here. So let's see, Kevin. If you think about it, trying to pick bottoms most likely will put you on a bearish candle. Exactly, Kevin. Yeah, you're exactly right. I mean, it's like this chart right here. I mean, wouldn't that have been a great place to buy this? I mean, wouldn't that have been just sweet? I mean, everyone's got to say yeah, right? I mean, look at this thing. You got to say that. The problem is, too many times with candles like this, what happens is you get candles maybe that confirm that first, and then maybe the bulls step back up a little bit. You know, they come back up maybe a little, and then you get some bearishness back in here because you have that battle going on between the buyers and the sellers. So you buy this down in here. This goes 3 or 4 days, and it doesn't do anything for you. You won't admit it to yourself, but your entry sucked pond water. And now you get out of it because it's not doing any good, but you fail to admit your entry sucked pond water. So you rinse and repeat. You keep doing the same mistakes over and over and over, just because you don't admit that is like that. So yeah, you're absolutely right. Let's say when you use a buy stop limit order, do you use a buy stop limit order to buy? No, David. When I want to buy something, I just go right out there and buy it. I just go out there and buy it. Let's see, MJ, a rounded bottom breakout? No. Well, I should probably look at it first, hadn't I? So a rounded bottom breakout, I have very strict rules about that, and this is not. A rounded bottom breakout has to do with price and the 50 period moving average right here and the 200 period moving average, and that is not a rounded bottom breakout. However, if you come back over here on MJ, that would be a rounded bottom breakout right there. But this is not. This is not. Let's see. Futures are interesting. Divergence continues with NQ stronger and ES. That won't last. Not forever, it won't. You are buying on momentum. Yeah, John. I'm buying on positive strength, looking for it to continue. Exactly right. So when you decide to buy within the buy box, do you check the hour and 2 hour charts to see the bull action? No. I'm saying that with a little hesitancy, okay? A little bit of hesitancy. So here's what I do. Let's just take MJ over here for a second. So I see MJ. MJ looks like a great chart to me. Today would have been a good day to buy, although I don't typically chase the first bullish candle. That's the candle that gets our attention. But that would have been a good day, maybe. Good time to buy it. So I'm going to look at this second bar in here, and I want to see a bullish bar. So let's say this thing opens up and it just starts getting bullish. Let me ask you, how would a 1 hour or 2 hour bar change what I'm looking at here? And I would argue that it's not going to change anything at all. I like the daily chart for what I see, and I'm going to trade that chart. Okay, I'm going to trade that chart. With that said, I have 6 monitors, and my monitor just to the right over here, I have another chart over here that shows me this in a 3-bar setup like that. All right. So I can see what it's doing on the 3-bar setup, but I can assure you that if we're looking at MJ on the daily, what we saw, this is not going to make any difference to me. But I do have that 3-bar just over here, right next to this, the monitor right next to this one. So I can look over at it, and I can see what the 3-bar chart is doing. I can see, and I have the T-line up there. I have the Trendicator just like that. It's just a 3, well, it looks just like this is what it looks like. So, like I say, I can see that, okay? But again, I'm not a penny watcher on the entry. So, if I like the chart and the chart is doing everything that I want it to be doing, then, and this chart is doing something, excuse me, this chart is doing something like this, well, I'm very likely to buy it, and it doesn't matter what the hourly or anything is doing. I forget exactly what day I bought Nikola here, but it was somewhere down into here, and I would have to go look at the day. It might, again, I'll have to go chase it down. But none of this was because of an intraday chart. This is a very typical chart that I'm going to trade. Here we rally up, and here we pull back. I mean, look at that chart. That's got buy written all over that bottom. All over that bottom. And I just don't feel that an intraday chart like an hourly or whatever you said there is going to help me from a daily chart. Let's see here. You see, Emma, do you use market order or limit order? I use a limit order on TradeHawk. I come over here and I say I want to buy something. I just plug it in. I go pick the month. I pick the strike price, and it's set up on a limit order. I click on the mid price. I always, 100% of the time, I start with a mid price, and what I will do more times than not, let's go back to MJ. This would be a good example. More times than not, what will happen is if the mid price doesn't fill within a couple of minutes, then what I will do is raise that price up a penny or 2 pennies. If I want in a chart, I want in a chart. I don't fart around with pennies for an entry. I just simply do not do that. Thanks, Vitali, is that right? Vitali? Thank you very much. See, GR, Rick, if AAOI breaks out tomorrow morning, how will you adjust the stop? Well, I really won't know that till everything opens up tomorrow morning. I can tell you that more than likely, and again, we don't know where the order would come in at. We don't know where we would buy it at. But let's assume it breaks out, and let's assume we buy it up here. I can tell you that my stop will be in the neighborhood, probably in the neighborhood of something around 1110 maybe, in that neighborhood. But I can't tell you what it's going to be until it actually happens. Okay? But I just, I kind of think, I mean, here's a resistance right here. Here's a resistance right here. We broke out today. We held over that. And I purposely put that line just slightly under today's body of the candle. So if we move up here and I buy that, where would you not like this chart? Seems to me that would be a very good area not to like this chart. Let's look at the 3-bar chart. I mean, look at that. You've got resistance, 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 resistance. Touch, 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 touch. Where would you not like it? And based on the 3-bar chart, I think I would actually drop that down just slightly. Just like that. Let's see, Rickster on XLU, on your explanation, will you add again? No, I won't. No, I'm in XLU enough now. I can't add to it anymore. I can't add. That would be too much money in one position all by itself. So I can't add to it. I'm already over by a little bit, and I'm okay with that. But I can't add to it anymore. But if somebody, see, in my case, I've already put all the money I can put into one position. If it starts to break out, this becomes a buy. I mean, if we start to see a bullish candle in here, to me, that's a buy. If it starts to break out, that's a buy. That's a nice looking chart. But for me personally, like I say, I've already added too much to the position. I can't put any more in there. So I'm going to grab some water here. Thank you. Rick, are you still focusing on options or more stock? Brock, I trade nothing but options. Every chart I look at is a stock trade. There is not one single chart that I don't look at, that I don't talk about, that I don't put on the watch list that you can't trade as a stock trade. For me, there is no difference. I trade options. I trade strictly puts and calls, directional puts and calls, which means all I'm doing is I'm betting the stock is going up and down just like you would on a stock trade. I apologize. My voice is starting to go here. Also, too, there is no way in the world. In fact, I think it's impossible. I do not think it's possible that in August of last year, okay, what would that be? 2020. In August last year, I opened up the new Road to Wealth account for $10,000. The account right now, at the end of this month, my goal is to close the account over $30,000. Okay? So when my statement comes out, my January statement will come out in about six days or something like that, 7 days. When it comes out, I want this account to be over $30,000. That's my goal. Right now, I'm right on that edge right now. And I do not believe that in this short period of time to where we are today, okay, I do not believe you can have that kind of return trading stock. I do not believe that. So that's why I trade options. And it's just very simple puts and calls. That's it. Let's see. Phil, 2. My goodness, Phil. Thanks for Thanks for being here, Phil. I appreciate it. Jay, thanks, man. I learned a lot about reading charts listening to you. Thank you very much. How do you screen for good trading tickers? That's really, really easy. I've got, I use this program called Live Trading Alerts. Thanks for asking. I use this program here, and I've got several windows that I look for, that I look at. These are just two of them, and they're all set up for my little world, is what they are. So they're all, they all look for a chart that does this in one way or another, things like that. Let's see what tap looks like here. See, there's tap, and this is where, there it is. This is my 2-bar low reversing, but it's two bar low reversing into a trap, right? The 3/8 trap. We talk about it all the time. We love that chart setup, that entry setup. So this is what I do, and I just wait for the charts to come up like tap, or let's see, make sure this stays on top. There we go. Or take BE as an example. B here, that's what I look for. Those kind of things like that. CLDR, these kind of things, just starting to come up. And this is just a different type of trap. This is this is crossing the T line and 17 within 10 days, I think this is, and then pulling back into the trap. Those kind of things. So that's how I arrive at the trades that I'm looking at. Let me make that go back away. There we are. And thank you, Jay. Let's see. Nigel, I don't understand RBBs yet, but on the weekly chart, price has moved down. Oh, you're talking to... Oh, C's talking to Nigel. See, rounded bottom breakouts are the simplest thing in the world. You're just simply looking for a chart that's trending down and that starts moving up. It's not hard, really isn't. I know you're in the trading room, so tomorrow, make sure you ask me specifically, and we will go look at RBBs. So tomorrow, I'm going to give you the tools to be the RBB king, and then I would challenge you to point us out RBBs to trade for the next several days. That will, believe me, when we're done, you will know everything there is to know about an RBB setup, and you'll be the RBB king, okay? Kimberly, yeah, plug is one of the trades on the trade list tonight. This was one that I almost bought going into the close, but every time I would start to buy something, I kept thinking to myself, I really wanted to sell some things. I wanted to be out of positions. Not in cash, just less risk. But this is definitely one that I kind of like here. And now here's the problem with a chart like plug. Look at the buy box here. From top to bottom is 17.5%. Holy moly, that's a lot. I mean, that's a deal breaker and a half right there. So wherever, if I buy it, no guarantee, but if I do, I'll have to adjust the stop depending on where I buy it. For instance, if I was to buy this breakout, no way I could use $65 as a stop. No way. Let's see, John, do you prefer inside candles or outside after downtrends for a reversal? And does the color of the candle matter to you? First of all, I don't trade candles that's in a downtrend reversing, and I'm pretty confident that I understand your typing, so there, you may not get all the words out exactly right. But first of all, I want to share with you that I do not trade stocks that are in a downtrend and then they just simply start reversing, okay? I don't do that. With that said, if I was going to do that, I would only look at bullish candles, not bearish candles. I want to look at a stock that's rallied up, pulled back for a higher low, pulled up again, and broke out of that high here. Now we have a trend here, and now I'm trading a trend, not a reversal point here. Now, let me read your question again. I want to make sure I get all that. Do you prefer inside day candles? When I buy, I like to see, let's come over here. I like to see, if we're going to, let's talk one candle right here. I like to see an inside day candle. I will buy on a bullish inside day candle. I will buy on an inside day candle that breaks out. I will not buy the initial position. I will not buy if that candle is red. I will not do that, because that just tells me it's still resting. And that's what that's suggesting. It's resting, and it could rest and rest and rest and rest. I want to make sure that there's some bulls out there eyeballing this stock, just like I'm eyeballing this stock. So I think I answered the color part of it. I think I answered everything there for you. Let's see, Hawk, can we take a break now? I need to make some more popcorn. Pretty quick. In fact, could somebody draw me a line down there? Pretty please? Appreciate that. Thank you. Let's see, Chuck, do you ever look for a bullish bar on a 3-bar chart as opposed to a daily? Not to start with, Chuck, no. Not to start with. You know, I think one of the reasons that I feel like I'm successful, okay? I feel like it. Maybe I'm not to some people, I don't know. I feel like it though. And one of the reasons is I don't chase charts all over the place. I don't chase a 5-minute chart, a 15-minute chart, a 3-bar chart, hourly chart, a weekly chart. I don't chase those. I chase one chart, the daily, okay? And the daily has to be exactly what I want. So far, we've eliminated the 3-bar chart completely. Now, where I mostly use the 3-bar chart is to diagnose this chart. All the 3-bar chart is, you're breaking the current candle or any candle down into 3 bars. That's all. That is all you're doing. It's the 3-bar chart is simply taking a singular candle and dividing it into 3. So that's what today's chart did based on the 3-bar chart. It moved up and consolidated. So I see, here's where I do see people that will do this. They'll look at this and say, well, I'm not going to buy it because it's pulling back. The bears are taking control. They're taking control. They're taking control in a just a super fine sliver is all they're doing. If I take this chart over to that 3-day chart, I look at that chart pattern, man, I'm getting all giddy about that chart pattern. That's on a daily chart, we would all be stumbling over ourselves buying into that. So, you know, I see these pullbacks, then that's when I'll look at that 3-bar chart, and then I will diagnose inside that candle. And then two, not only will that, because a lot of times, you know, the last bar is not put in yet, or even the second bar is not put in yet. So I'm going back to the first bar today, the last bar yesterday, the middle bar yesterday, the first bar yesterday. I'll take a look at those. But I for one, do not start a trade off the 3-bar chart as a rule. Okay? I don't do that. Everything starts with that daily chart. Let's see. Thinkorswim does not have the T-line. Yes, it does. Deborah from Florida. Yes, it does. All the T line is the 8 exponential moving average, and I guarantee you, Thinkorswim has that. Okay, all it is the 8 exponential moving average. Let's see. Okay, I'm drunk. No pictures, Kevin. No pictures, please. Let's see here. Let's see. C, you must not be talking to me. Maybe Nigel there. And thank you, Nigel. And again, C, make sure you ask me tomorrow. We'll definitely. I promise you. You ask me early enough in the day tomorrow, and I promise you, come tomorrow night, you are going to know so much about the rounded bottom breakout. Let's see here, Barrett, you guys. I don't get to read the chat till later on. You guys type faster than I can read and go through the charts. So now I just realize what Kevin's getting naked over, the naked charts. So it's kind of funny to read some of this stuff afterwards. Take care, Malcolm. See you tomorrow. Let's see. Rick, what do you do when your long call positions are running out of time? Say the chart is beautiful and instead of breaking out, it continues to consolidate. Very simple question here. I'll bet you in a year's time, I'll bet you last year that happened to me maybe once, maybe twice. So here's what I do. All right, let me show you here. Let me bring down my thingamajigger here. So let's look at buying some plug here. So we're gonna look at buying some plug. I'm gonna type it in there. To start with, I'm gonna go 50 days out minimum. So at the bare minimum, I can go to March. I won't go February because that's only 24 days. So I'm gonna go minimum March. So let's take a look at that. And I don't know why that's down there, but okay. So I'm going to come over here. I'm going to look for approximately 72 delta. So there's 72 delta. So I'm going to look at the $60 strike. March, 50 days out, $60 strike. Okay. Now that we know that piece of information, I've got 50 days for this chart to work. If this chart moves up like this, I'm taking profits. I get nowhere near 50 days. Okay, nowhere near 50 days. I run into this a lot, and honestly, and I want to share with everybody, up until a couple years ago, I've never traded an option in my life. I've traded for 34 years. This is my 34th year stock trading. 34 years stock trading. I didn't trade an option till December of 2017. I started the first Road to Wealth account January of 2018. Now keep in mind, I've never traded an option. I was like Mr. Anti-option person. My good friend Doug Campbell, who runs Right Way Options, I call him up. I say, Doug, can you help me? He said, sure. So he brought up some good points, I think are good anyway. He said, since you're pretty good at direction on a chart, he suggested that I simply trade simple, or start with simple calls and puts. Well, I didn't know, I would have come over here and traded, really early. But I learned a little bit about that. Also, too, just because the expiration is 50 days out, or 140 days, or 233 days, there is no option cop that's going to come arrest you. There's no rule, there's no law that says you have to wait 51 days. You don't have to wait 140 days. You don't have to wait till expiration. Again, I'll bet you one, maybe twice last year, I bought something and I had to wait till late, and that was just because Maybe the chart moved back and I didn't get out of it, and I didn't get out of it, so I decided to wait for it because I had time. And if I wait for it, then I can, as long as I have time, I can wait. Sometimes that works, sometimes it does not work. But as a rule, I go, again, that 50 days out, when the chart moves up, I'm selling it. Just like that. So I don't have that problem. But it's one of those, I think, misconceptions when you're trading an option. I mean, I had so many misconceptions about it. I was so wrong. But Doug basically took a coaching class from him, and he squared me away. He answered my questions, helped me, do this, and from I got to tell you, I will only trade directional ops. I have no desire to get any more fancy than that. I think I'm doing just fine, and so I'm going to continue to do what I do. But it was one of those. It was a major misconception that I had to hold it for 51 days or 142 days. You were locked into the trade, things like that. And man, so not true. So not true. So I hope that helped. I hope that helped. If you can get into the trading room tomorrow or anytime, ask me more. We'll talk about it more. I can show you in real time and even make a trade in real time so you can see it. Let's see, Richard, talking about stop management. So often my trades get stopped out on the wick. Price takes the stop out when the stock goes on to be a big winner anyway around that. Nothing other than lowering your stop, Richard. No, really there isn't. Well, I take that back. There is another way, okay? So let's go look at XLU. All right, let's take XLU for this example. So the first way is maybe your stops are too tight. So that's something that we probably need to look at. And by the way, it's not all the stops. Maybe it's your entries in combination with your stops. So it's not just the stop. It could be a combination of things, okay? So let's take XLU. So say you buy XLU yesterday, okay? You bought XLU yesterday. Maybe you bought it, let's just put a line. You bought it here. And let's say you put your stop right there. You got stopped out, okay? All right, no problem. So I think on your statement here you said just in a day or two or something like that, it turns around to be a winner. You like the chart here well enough to buy it, and you got stopped out. I'm good with that. I mean, I think it's great. You put a stop in, you lived with your stop, and it worked. But just because your stop was hit, does it change the chart? I would argue probably not. Probably not. So as the chart starts to move back up, why not get back in it? I mean, you liked it right here. You liked it here maybe because of just this candle, maybe because of all of this through here, maybe everything in there. And you got stopped out, so now you hate the stock? I mean, not hate it, but you don't like it. You wouldn't like it if it started to move up again. See, that would be the other thing, is maybe your stop in combination with your entry, maybe in combination with the market condition. Maybe there's something there, or maybe you're doing everything just perfect, absolutely perfect. But what's happening is the stock starts to move back, and you're neglecting to get back in it. Again, you liked it right here. This does not mean we don't like the stock. Good point, by the way. Good point. Paul, the T line is the 8 exponential. Thank you, Nigel. Let's see. Thanks, Newton. See you later. Yeah, I'm getting close to getting out of here. OXCL. No. Hawk, you play with a lot of those penny stocks and that sort of thing, I think. That's not necessarily where we want to go. But yeah, I mean, that's a great looking chart there. It is. Nice rally, nice pullback. Let's see, Brock, what are your thoughts on penny stock? I think they suck, okay? I think if you're a penny stock trader, you're bound to be a loser someday. That's what I think. Do you use pivot points? No. I have nothing against pivot points. I think pivot points have a place. I don't particularly necessarily use them on a chart. Sometimes I look at. I do have pivot points on there, but they're not a major player in what I'm looking at. What I'm trading mostly is simply the chart and chart pattern. I'm looking for bulls to be active, and I'm looking for them to take a rest, and then I'm looking for them to be active again. There's a reason why a chart rallies. There's a reason why, and it's not mom and pop buying it. That's not a mom and pop there. That's not a retail trader. That's not you. That's not me. That's not this entire room. This is some big money. It's big money when we do that twice. Big money 3 times. That's big money there. That's not mom and pop. That's not. It's just not. It's not mom and pop and the kids here. So I take advantage of knowing that piece of information. I take advantage of a rest. All stocks take a rest, and then I take advantage of that trade starting to continue its trend. Kevin C, do you? Kevin, do you have a slippage rule between bid and ask? I really don't. What I'll do is if I'm looking, well, here, let's do this. I'm gonna go back to plug. I've got plug in here. I'm gonna come. Let me move another one down. Another window for you. I'm gonna move this window right here, which it's already on plug, but we're gonna do this again. Say I'm gonna look at that strike. I'm gonna click on that 72, and see it changed my ticket. So this is my order ticket. I can change the size, but right here's the bid, the mid, and the ask. Right here is the percentage between the bid and the ask. If I really want the chart, if the bid and ask is 8, 9, 10%, I'll take it. But I prefer somewhere in this neighborhood, 3%, 2%. I prefer that. That slippage, I don't give a hoot about those pennies. I really don't care. Here, let me put this back before I lose it. There we go. So when I'm looking, let's go back to plug here. So when I'm looking at plug, I really don't care about the entry. I don't, when I go hamburger shopping, I don't go to McDonald's because it's cheaper than Wendy's. I don't do that. I decide, do I want a Wendy's tonight or do I want a McDonald's? Like I say, I don't fart around with the pennies over here. What I want to look at, does this chart have a pathway to making me money? That's what I want to look at. I want that pathway. Do I see a path where this can make me money? This right here, this is pennies. This is money. This is money up here. So I hope that makes some sense. It took me forever to learn to get over that. I've got to buy at some special price, or I have to pick this stock up for a total value of whatever I choose in here. And when I started to realize that the trade was not here, the trade is what it can do for you. That's the trade. That's when my trading just started taking a huge upturn. and this goes years back, is I just quit worrying about the entry. I focused on charts that were set up in good chart patterns, and I focused on charts that had a pathway to profits. I see a pathway to profits. I know that a chart pattern that looks like this is very typical. Let's see here, arrow. Let's make this magenta. When I see a chart pattern that does this and start curling up, I see that consolidation in here. I see that sort of thing. I see that breakout. This right here is telegraphing up here. So now, what it's not telegraphing is it going to happen all tomorrow, the next day, or the next day? That it's not. Nothing telegraphs that. That's why I'm willing just to buy it somewhere in here and just sit on it until it does what I want it to do. And I got to tell you, that's where the big change really started to happen for me, is quit worrying about those doggone entries. Focus on the chart pattern, price action. Price action is what makes the chart pattern. And then focus on the pathway to profits. Thank you for that. I love talking about that. I love it. One trader told me, "Don't be a dick for a tick." Yes, I've had a couple of traders tell me that. Yes, yeah, really. You know, here's the thing. Are we going to? Let me go to my pin here. Let's see, pin. We'll do red this time. And are we going to screw around over here for what? 10 cents? Are we going to screw around over here for 10 cents to miss, say, $200 or $500? You know, it all depends how many shares or contracts you buy. But are we going to, like I say, when I decide I want a hamburger, I don't coupon clip for do I want a McDonald's because it's cheaper than Wendy's? I just, you know what? I feel like a McDonald's tonight, or I feel like a Wendy's tonight, or a steak. If I want a steak, I go to a steakhouse that's going to serve me a good steak, or I cook up a good steak. I buy a lot of steaks from Sam's. You know, I buy big old ribeyes. You know, I don't go buy a ribeye and then buy. I can only buy a ribeye that is this thick because I don't want to pay $35 for 3 of them. Man, I want my ribeyes to be that damn thick or that thick, and I'll buy 3 of them, and I don't care what it costs. So, like I said, like you say, don't be a dick for a tick. You're right. You're right. Do you use hard stops? No, I don't, Jess. You know, here's the thing, okay? This is one of these questions, and I think a lot of the questions fall under this category. I get asked how I trade, but what you don't understand is everything about what I do, okay? So I'm hoping at webinars like this, more of that comes out. So you're asking one simple question, and if it was the only question that was asked tonight, and I gave you my answer, I would be doing you such a disjustice. It's insane, the disjustice I would be doing you. So you have to take everything in account that maybe I've talked about tonight, and I'm going to get to your answer. I think I've already answered it, but I want to talk about it, okay? So you've heard what I've talked about. I focus strong. I focus big time on the chart pattern. Big time. I mean, I cannot stress upon you how important that is. Huge. Another thing that I want to stress upon you is that, where's my pen? Pen. I've been trading for 34 years. Okay? Out of that 34, let's see, I've been here for going on 14, so 20. So for about 22, maybe 23 years, I've been trading full time. My only job was trading. making a living, okay? So I've got some experience in there. Not only do I have 34 years experience, I've got 22, 23 years of success, not hit and miss. Okay, success. That makes a difference. Here's another thing. I sit in front of my computer all damn day. All day long, I'm in front of my computer. This is my job. So, as I sit in front of my computer, I don't have to put a hard stop in. So no, I don't use hard stops. Okay? I have a stop. Here it is. And when I buy this chart, I will adjust my stop accordingly after I buy it. And I 99%, 98% of the time, I obey my stops. I'm like anyone else. Sometimes I don't. Okay? So you have to understand the big picture here, the whole picture. When you say, do you use hard stop? You see now why I can't say, no, I don't. Because now if you go out and you say, well, I'm not going to use stops. I think Richard up there was saying, he gets stopped out all the time and then the stock, moves up. Well, I don't want you to run out and not have success under your belt and say, well, I'm not going to use stops because Rick doesn't use stops. You have to know that whole picture, the whole entire picture. Okay. David, to stack probability on a trade, do you include looking at the industry group? No, not usually. No. To make sure the group is rising, or do you use price action only? Yes, price action only. And David, again, you have to understand where I'm coming from, okay? I'm a short-term stock trader. Short-term. Do you guys know that when in August I opened that account, the Road to Wealth account, for $10,000, my goal was to double that account in 12 months. Okay? That's all. 12 months. Just double it. Now, to some folks, that seems like, whoa, that's a crap ton of money. How can you do that? I've already doubled it. I'm on my way to triple it. In fact, I have tripled it. Okay? But do you know to go from 10,000 to 20,000 in 12 months, you only have to net $42 a day? Do you know that? I mean, you probably do know that. But to hear somebody say that and to have it, looking at it like this to me is a massive eye-opener. So I don't care what the industry does. All I care is that I have a good solid chart pattern. I see buyers, and then it moves up a little bit. Now, I trade for more than $42. That's the only way. That's the only way you can triple or quadruple, that I can quadruple the account. It's the only way I can turn $10,000 into maybe $50,000 in 12 months. Okay? So I'm trading for more than that, but I don't need the industry. I don't need that sector to be all hot and bothered to get those little moves right there. And again, that is my trading style. My trading style is not buy plug for long term. I have no interest in that. I have long-term trades. I don't trade them. I just add to them, but I don't trade them. So again, this is one of those things where you've got to know the full picture of what I'm doing. Okay. And good question. Thank you. Let's see, Jay, how do you set the 34 EMA trending on the scanner? Jay, can you ask me that tomorrow, please? Just because we're getting late in the day tonight, okay? And then that just brings up a bunch of scanner questions. So tomorrow, if you're familiar with the scanner, you can go look. Just type in trend, and you want the one that reads bull trend, and it does it for you. Okay. Let's see, Nicole. Not clear on the 3-bar chart. Is that 3 days per bar, or it's 130 minutes? Is what it is. 130 minutes per bar. 130 minutes. Thanks, Ed. Thanks. It's Ed's birthday today, everyone, in case you didn't know. Scotty, Nicole, see Nigel, Steve. Years ago, you would kick me out of the room for suggesting you do option. My bad. As you grew the $10,000 account, did you take bigger positions? Yes, in each stock, or did you increase your portfolio of stocks? How many stocks do you trade within? No, you never. I don't think anyway. You never want to increase the amount of positions. If you did that, you would end up with so many positions that you can't handle that many. You just can't do it. I find that I can handle 10. I can handle 10. That's a bit of an overkill sometimes. And generally speaking, I probably am in anywhere from, say, 1 to 8, maybe, something like that. That's probably the most. So what I did when I with the account, I was trading with $10,000. What I was doing is I would put $1,000 into a position. That's how much I would trade. Okay. So that's, and then as it grows, right now I'm putting around 2,000, and I say around because with options you can't buy just $2,000 worth. Sometimes it's 2,300, sometimes it's 1,800, things like that. But right now I spend around 2,000. The last couple of days I've only been spending $1,000 because I'm a little bit markets. It's in that area that's just making me kind of nervous. Not that I'm thinking it's bearish. I just get nervous in choppy markets. Whew. Thank you very much, Fred. Appreciate it. All right, guys, everyone, thank you so very much for being here. An hour and 53 minutes. That's enough. I think we should all go home and go to bed. You guys all have a wonderful, wonderful evening. I will try to have this rendered tomorrow morning, and we'll get it out tomorrow. Thank you again for being here. And even what's more amazing, there's people backing out now, but I see 185 people in the room. I saw it hit right at 300 people here tonight. Again, I want to say thank you. That was fantastic. Appreciate everybody. We'll see you all tomorrow. Thanks.